we continue with incomplete records. Activity 8. Yeah, they said you're given the following information relating to the assets and liabilities of J. Jones for 2019. During the year, this is a transaction. Then during the year, there were a number of transactions, all of which were entered into the bank account. So that means we have a bank account for that. So that would be a true check. So these are the transactions, and the equipment is depreciated annually at 10% of its cost. Calculate the capital account for J. Jones at January 2019 and prepare the statement of profit or loss and other comprehensive income and statement of financial position for the year 31 December 2019. We have to prepare the trade payables account and trade receivables account. So, but before then, there's our statement of affairs, because here they said we should find capital. And to find capital, we need statement of affairs. So here we have assets and liabilities. So from the difference between our assets and liabilities will give us our capital. Do you get the point here? So what we need to use is the 1st of January 2019.
Yes.
The year ends in 31st December 2019. So all our transactions here, all our items for January 2019 is what we're going to use. So for the statement of affairs as at January 2019, because they said we should calculate calculate the capital account of J. Jones at January 1, 2019. So all we need is the opening items, not the closing. If we are told to find the closing, we use the closing. But here we are using the opening. So in the opening we have equipment at cost, which is 3,000, is there already for the 1st of January. We have inventory. We have trade receivables for 2,130. Then we have cash at bank, which is 480. So the addition gives us 8,160. So our total asset is 8,160. Then we have trade payables. The only trade payable we have, the opening trade payable is 1,620. So you less it from it. Then we have our capital to be 8,160 minus 1,620. So our capital is 6,540. I think it's clear. Now we have found the statement of affairs account. We go to the trade payables account. Remember, for the trade payables, your payment will be on the debit side, and your balance will be on the credit side, and your purchases. On the trade receivables. So, like I said earlier, when you are preparing your trade payables account, your payment will be on the debit side, because the trade payable is receiving that card. The credit supplier, you are paying the credit supplier, so it's going to be on the debit side. When you are taking from the supplier, you'll be on the credit side. I think it's clear. And for trade receivables, because the credit customer is paying you, payment will be on the credit side. Then whatever revenue will be on the debit side. I think it's clear. So now we'll go on. For our trade payables control account, here we have
9,000.
Yeah, payments. It said trade payables are payments. Go down. Payment for trade payables is 9,600. Is there?
Yeah.
During the year, you see it there. Payments 9,600. It will be on the debit side. Then we have our balance,
which will be.
Now, in your trade payables, your balance will be all the end year.
Yeah.
So our balance for trade payables will be 1,680.
680.
Do you see it there?
Yeah.
That's all. Then on the credit side of the trade payables, you have the balance carried down, which is from the first. You know, it is opening, closing minus opening.
Oh, okay.
Yeah. So here, closing is 160. Now on the credit side, you're going to have your opening on the credit side.
Okay.
So your credit side will have 1,620. Then the difference between the debit side and the credit side will be your purchases.
Oh, okay.
Purchases is not given. You need to find purchases.
You need to find purchases. Okay.
Yeah. So the addition here we have 9,600, which was the payment. You paid 9,600. Then you have 1,680. 1,680. So it gives us 11,280.
Yeah.
11,280 minus the balance,
which is 1,620, equals 9,000.
The closing balance of trade payables gives you 9,660. So that means your purchases is 9,660. Is it clear? Then we go to trade receivables account. For trade receivables account, we use the same method. Now our balance brought down, which will be the closing now for trade receivables. Our opening trade receivables will be balance brought down, which is 2,130 on the debit side. Then we have our revenue, because purchases on the credit side, revenue will be on the debit side.
Yeah.
So revenue, we have it. We need to find it because we
Okay.
are not given. So on the credit side of your trade receivable, the amount of money you receive from your credit customer,
It is.
you credit the receiver.
Okay.
So trade receivable are your receivers. How much did you receive? Trade receivable received payments of trade expenses. Payments of trade receivables.
Yeah.
20,670. Do you see it there?
Yeah, 26. Yeah.
Then our closing trade receivable, 2,490. So the addition of closing trade receivable plus receipt or payment
Yeah.
received
It is 23,100
160 minus 2,130
minus revenue.
minus 2,130, which is the balance, will give us our revenue.
Oh, okay. So these two will give you your revenue.
No, these two minus,
Minus this will give you your revenue.
yes,
And here, these two minus this will give you a purchase.
yes. Is it clear now?
Yeah.
So that here it's going to be your opening, but here it's going to, for purchases, it's going to be your closing.
Oh, okay, okay.
You minus your closing from purchases
And
to
here
get
mi-
purchases.
And you have managed your opening with
For,
closes.
is it clear?
Yeah.
Okay. So that takes us to the statement of profit or loss and other comprehensive income. We have our revenue. The revenue is already there in the
Yeah.
trade receivables.
21,030.
21,030.
Opening inventory.
We have our opening inventories here already.
Purchase. Why do you not put less opening inventory and you put purchases inside it? Or less
No.
cost of sales?
Cost of sales.
Yeah, why do you
Cost
not
of
put-
sales is opening inventory plus
Yeah,
purchases less closing inventory.
Yeah, why do you not put cost of sales on
No, it doesn't matter.
Doesn't matter.
Yeah, but you know that we have to take our cost of sales, which is purchases, opening
And
inventory, and closing
of sales.
inventory. Yeah.
Closing inventory.
So
Which
our
gives you
revenue
gross
here,
profits.
hold on please. Our revenue is 21,030. Our opening inventory is here. Check the opening inventory. Inventory on the 1st of January,
It is 2,500.
2,550. Then our closing will be 3,600.
Yeah.
Is there the closing?
Mhm.
3,600. Now we have our purchases. The purchases we got from our trade payables,
Yeah.
which is what's our purchases? 9,660.
Okay, 1 second. The time is mixed up for my mom. She thought we were doing 5 hours. She's like, you still in class?
Ah, okay. Shall we now?
Yeah.
Okay. So we have the different, which is purchases down, which is 960. So our now our cost of sales is 2,550 plus 9,660, which gives us 12,210 minus closing inventory, which is 3,600. That's our cost of sales. Our cost of sales now is 8,610. 8,610 minus
2,000.
revenue 21,030 gives
Gross
us our
profit.
gross profit, which is
Then we have
12,420.
to calculate expenses
Now we have to
And-
less expenses.
and depreciation and drawings.
So expenses, we have our expenses
5,400.
430. Depreciation, how do you get depreciation? They said 10% depreciation. Look at it there.
Yeah.
10% at cost. Depreciation at cost. 10% of 3,000. 10% of
Where
3,000.
does it say that?
10% of 3,000 at cost.
Where exactly does it say that?
Look at it, please. Calculating depreciation.
Here, 10%.
Yeah, at cost.
Yeah, 10%.
Yeah, so 10% of 3,000 is 300. So you had it, it costs an expenses.
The 10% of 5,400.
No, the 10% of
3,000.
equipment at cost.
Equipment and cost.
The only you have depreciation on non-current assets.
Yes.
I wrote it already. This is 10 over 100.
Okay. Okay. Continue, Mr.
Okay. Equipment. You only have depreciation on equipment, so
Yes.
that is an expense. So 10% of 3,000 is 300. 300 plus 5,430,
Mm-hmm.
which is our expenses, gives us 5,730. You take it away from
12,000.
gross profit.
So it will give us profits for the year of.
Yeah. So gross profit is net profit is gross profit minus expenses.
Mm-hmm.
Gross profit here is 12,420 minus expenses 5,730. That gives us 6,690. So that is activity 8.
Now
I think it's
activity
clear.
10.
Activity 8 is clear, right? So go to 10. For activity 10, are you there?
Yes.
Okay. So we start with.
Yeah, that one.
So they said, it's a long one though. They said, Miro's shop sells rugs imported from India. His statement of financial position is as follows. We have the case study there, the items. Then we're told to find, so we go up again. They said, The only record kept by Miro is the cash book because it's an incomplete record. We want to make it complete. Which all transactions that pass through the bank account are recorded. A summary of cash book for the year ended these days. We have the cash summary and we have a supporting document which has our cash takings. So we'll start. They said, then we have additional information. Additional information, we have inventory, which is opening and closing. We have prepaid telephone expenses, accrued electricity. These are going to go into our expenses account. We have outstandings on the trade receivable and trade payables. We use that in our trade payables and trade receivable account. Then Miro has taken goods that cost 710 from business for its own use. That is drawings. Then we have fixtures and fittings that are to be depreciated at 20% per annum using reducing balance method. That will be done with 20% of fixtures and fitting. We're going to use the carrying value. Not at cost. Carrying value is cost minus the provision for depreciation. Yeah. That gives us our carrying value. So when you are calculating for depreciation, you use the carrying value to get your depreciation. Yeah. So we start with trade payables account. For trade payables, we have our bank. On the debit side, we have our bank, which is 32,061. Is here already. 32,061. Is there look at our cash summary.
Yeah.
Payment of trade payables, 32,061. Clear?
Yeah.
Then we have our balance carried down, which is 5,930.
Yeah.
Go back here, trade payables, 5,930. Did you find it there? Please?
Go.
It's here. It's written on the
What
additional information. The trade, I told you at the beginning, trade payable and trade payable outstanding.
Outstanding. Oh.
It's additional information. It's there, respectively.
Yeah.
5,930. That's on the credit side. You add it together. Then our balance brought down 6,140. You check it on your statement of financial position. Statement of financial position, yeah. 6,140. It will be on the debit side.
Here, mister.
Yeah. Okay. Yeah. You. Statement of financial position, 6,140. So this plus this gives us on this debit side 32,061 plus the outstanding 5,930 gives us 37,991. Outstanding, you have collected the product. You have it's your liability, so you have to pay it. That's why it's going to be added to the debit side of the trade payables. Okay. Because you have purchased these things, you have to pay for it. So at the end of the day, the trade payables will still receive that payment. That's why you have to record this. And accrual principle. In as much as you have taken the liability, you have to record it for that here. Okay. So 5,930 plus 32,061 minus your closing. Closing trade payables will give you your purchases. The same way we did that. Yeah. So 37,991 minus 6,140 gives us 31,851, which is our purchases. Clear? Is it clear?
Yeah.
So our balance brought down will be 5,930. Done. So we go to trade receivables account. For trade receivable account, on the debit side we have our balance brought down, which is 8,120. It's written there already.
Yeah, Mr. Trade receivables.
Yes, 8,001. Have you seen it?
Yeah, of course.
Okay. So then we have we need to, on the credit side, our credit customer paid us 40,014.
Yeah, no, it's not there.
It's there.
Where?
Credit customers. 40,000 payments from trade receivables.
Yeah, payments from trade receivables.
Yeah, credit customers.
Yeah, which we put on the credit side.
Our credit customers.
We put on the credit side.
Yes, but the point is, our credit customer paid us, and all the transaction was done through cash, check. So bank, 40,014. Is it clear now? Then additional information, we have our trade receivables, 6,840. Can you get that?
Yeah.
6,840. You add it together, you less it from the opening, 8,120.
Which
that
is
gives us
38,700.
8,120.
38,000.
Our revenue will be 38,734. Do you know why?
Yes.
This minus this gives us this.
Yeah.
So our total in revenue will be 46,854. Clear.
With this balance thingy?
Our balance brought down. Yes, here. Yeah. The balance brought down. Balance carried down becomes balance brought down for August. Clear. Now we prepare this statement of profit or loss and other comprehensive income.
Oh, it's easy, mister. So which we have revenue.
Revenue from the trade payables, trade receivables, 38,734.
And then we have the cash sales, which
from the cash taking, the total cash sales, cash taking.
Cash taken.
Yes,
Yeah,
9,000. Cash taking is 9,000.
14,000.
I'm coming back here first.
Oh.
That is cash sales. Cash taking is 9,015.
9,015. Okay.
Cash taking. Now our cash sales, the value for cash sales is here on the debit side
68.
of the cash summary is there 14,310. All these
Where is
are
this,
part
mister?
cash takings. I just said it now. Cash takings. Cash takings.
Okay.
Please listen, please.
Okay.
That's
The
cash
cash takings
takings
before
plus
the
cash
revenue.
sales plus revenue.
Mhm.
Give us our total sales.
Okay. Then we have
All these are payments too from our credit
Yeah.
customers.
Okay.
So that's
Then we have
62,059.
opening inventory.
Now less cost of sales, which is opening inventory is there 6,300. That's you have to go back again to check. Opening
Yeah.
inventory.
It's
6,300
6,300.
is there.
And then we have purchases, which is the
We have
31,000.
31,851
Which
from
we
the
take
trade
to trade
payables.
payables, yeah.
Yes. Then we have
Less
Let-
closing
closing
inventory,
inventory.
which is the
is here.
here.
In the additional information, 4,130 is there. Additional information, 4,130.
Yeah.
Okay. So 6,300 plus
Plus
31,851 minus
Equal
4,130
28,000.
equals 34,021.
Then we minus it by revenue.
That is our cost of sales. This is our cost of sales,
gross
34,021.
profit.
You take it away from your sales, which is 62,059. This gives us gross profit.
Yes.
So this gives us our gross profit, which is 28,038.
They have
Now,
less expenditure.
with less expenses. Our expenses start with wages. Now you go to the wages.
Which is the 7,300.
No, the wages that's done like that. You check. There's
Yeah, 7,301.
Okay, for wages is done 7,301.
Telephone is the one that you have to check.
Yes. So now telephone expenses. We have our telephone expenses from our statement of profit or our statement of financial position.
Prepaid,
Prepaid
416.
416.
And then we have telephone for our cash book on
Yes,
the credit
which is-
side,
Yes.
which is 420.
You add it.
Yeah.
Then we have additional information.
Information.
They said telephone expense.
Electric charge. No, a prepaid
Prepaid.
telephone.
So you have to prepaid is for 2020.
yeah.
So you have to take it away from the payment of this year.
So you have to minus it.
So in 2020 statement of listen please. In 2020 statement of financial position, you have is at other receivables.
Other receivables. But in current,
In 2019,
it is just prepaid
in 2019 you less it from your expenses
expenses. Oh, okay.
of your statement of profit or loss.
Of course.
Because it's
done
going to
this year.
2020.
Exactly. But I have a question. In 2020, you don't put it on your statement of profit or loss in 2020?
No, 2020.
Because you already paid it in 2020.
In 2020, you had it to your statement of profit or loss, and to be other receivables in your statement of profit or statement of financial position.
Okay, I have a question.
Because you have left it here.
Oh.
In 2019, you made the payment in 2019.
So you don't need to put it in 2020.
It's not going to be in 2020.
Perfect.
It's only going to be in your statement of financial position in
By
2020
Perfect.
as other receivables
Okay.
in your current asset. So that's the final figure, which is 596. So we go to motor expenses. For motor expenses,
Electricity.
oh sorry, I have electricity.
And the cash book 680.
Yes.
And then we minus it from the additional
No, it's not just minus. There's an information here.
at 496 electrical accrued.
Accrued. That's accrued. That
Which
means
is-
you have used it, you have not paid for it.
Exactly.
That's why you have to less it from the expenses.
Then plus.
Then you have, in the additional information, you have electricity.
yeah, 490, Mr. The
Yeah.
second point.
It is part of the, it's here,
Part
electricity.
of prepaid.
Where is it?
It's prepaid.
Yes, you had it.
Yeah.
You add it to it, which
But
is,
it says Mr. accrued electric charges of 490. Why don't you minus that too?
this accrued is for 2020. This is
Oh.
2019 statement of financial
Okay,
position.
okay.
So this accrued is for 2020.
Yeah.
So now it's accrued, but you have used it because it is an expenses
It is
for,
for
this year.
Mhm.
You have to add it to expenses.
Okay.
If it was prepaid, you less it.
Yeah.
Because it's accrued, you had it.
Okay.
Here it is prepaid, you less. Accrued, you had. Because you have used it.
Okay.
Prepaid is what you have paid for that the service is going to be for the next year.
Okay.
But accrued, you've used the service, but you are yet to pay for it.
Okay. Mr. Can you do trade payables and receivables before this? Or it doesn't matter if you do this before this?
No, you can't do this. You have to do this before this.
Okay.
Because you need revenue, you need purchases from this statement, from the trade payables and trade receivables.
Yeah.
Do you understand? So our electricity is clear, right?
Yeah.
Now go to motor expenses. Our motor expenses, we have 1,904 in the cash summary.
Yeah.
Then our car repairs.
Yeah.
Car repairs 1,002. You add it together, that gives us 2,906. Is it clear?
Yeah.
Then we go to printing. Our printing is 210 in the cash takings, and we have our printing here 600. That's 810.
Yeah.
Clear. Then depreciation. They said depreciation should be done by 10% reducing 20% reducing balance method through the carrying value I told you earlier. On what? On fixtures and fitting. Fixtures and fitting has 14,800. So 14,800 multiplied by 20 divided by 100 gives us 2,960.
Perfect.
So 2,960 plus 810 plus 2,906 plus 674 plus 596 plus 7,301
15,247.
gives us 15,247.
We
less
minus
it
it from purchase. Gross
from
profit.
God's profit.
To
That
get
gives
profit
us
for
our
the year.
profit for the year. And
You're
that's
so smart, mister. You're so
income
smart. mister.
expenditure,
So
income,
smart.
incomplete
You're so
accounts.
smart.